Why has Verizon tanked so much over the past month? Here, just at the end of April, we saw a share price of $38.83 per share, and not a month later, on May 25th, we saw a share price of $34.82. Now, in this video, we're going to talk about the market factors that have caused this drop in share price, and also do a full dividend analysis and see whether or not Verizon belongs in your portfolio at these lower prices. So first, let's talk about why this share price drop has happened. And the reason is very simple. Here over on yahoofinance.com, we see an article by Bloomberg that Amazon is in talks to offer free mobile service to US Prime members. Now, free mobile service, Verizon sells mobile service. So if someone comes in, especially a big market player like Amazon, and offers free service to its customers, that's going to take market share away from Verizon Wireless. And here we can see that not just Verizon stock has gone down, but also AT&T and T-Mobile have seen 3.15% drops, 3.76% drops, and almost 6% drop in share price. Now, at the same time, we're seeing a double-digit increase in share price for Dish, and we'll talk about why that is in a little bit. But first, let's take a look at the details and what Amazon is doing with these companies. So Amazon is negotiating with Verizon Wireless, T-Mobile, and Dish Network to get the lowest possible wholesale prices on mobile service to possibly offer plans to its members for $10 a month or free. Now, I think it's a little bit sensational to say that Amazon's going to provide free mobile service to its customers. It's not going to be free. The customers are going to have to pay for it in some way, either by actually adding the mobile plan onto their Prime membership, or Prime memberships are just going to go up. They can't actually provide free mobile service, but, it makes a good headline. So this news has caused a huge drop in Verizon's share price. So if we go over here back to NASDAQ.com, we can see that, what we covered at the beginning of the video. At the end of April, share price is near $39 and almost hitting all-time lows at the end of May. Now, this has bounced back a little bit. I think the market definitely overreacted to that news, and now we're seeing a little bit of a bump back to sanity. But for the time being, this is still a share price that is much lower than, their 1-year moving average. Now, this share price drop has caused a huge spike in the dividend yield. Here we're looking at the dividend history on NASDAQ.com, and we can see a dividend yield of 7.31%. Now, that's at least 2.5% higher than what Verizon typically yields, and that's with the same annual dividend of $2.61 per share. So if we go down here, we can take a look at their actual quarterly dividend payouts, and you can see that it's been increasing steadily, at least for the past 10 years. And what I'd like to do now is actually look at Verizon's dividend history. And here we can see their dividend history back since 1984. They've been paying dividends for over 40 years, and the only time they haven't increased their dividend is this one period between 1997 and about 2005. And since 2005, they've been increasing their dividends fairly steadily. I mean, these definitely in the beginning, after they began increasing their dividend again, they saw some pretty large increases, and they've been pumping the brakes since then. And we can see that down here in their 20-year, 10-year, 5-year, and 3-year dividend growth rates. Their 20-year growth rate is 3.12%. That drops to 2.5% for the 10-year, drops to 2.08%. And then over the past 3 years, they've been growing their dividend at about 2% per year. So that's a decent growth rate. It's a little bit lower than historical inflation, which is around 2 to 3%, 2 to 4%. But the overall trend is up, and they've been increasing their dividend since 2005. So I think that qualifies them as a dividend contender, or is it challenger? I can't remember, but perpetual dividend increases is what we'd like to see to get the dividend snowball rolling. And I would say that Verizon definitely qualifies as a perpetual dividend increaser at this point. So that's a little bit about Verizon's dividend history. Now, is this dividend sustainable? And in order to calculate the sustainability or determine the sustainability of a dividend, we need to calculate the payout ratio. Now, Dividend.com can do that for us over here. We can see their payout ratios are 55, their current payout ratio is 55.34%, and that's based on their most recent quarterly dividend of, let's see, what's their most recent one? 65 cents, 65.3 cents per share. And that was sometime in April 5th. So something to note about Dividend.com, when they calculate payout ratios, they only do it on net income. And if you've been following this channel, you know that I like to calculate payout ratios on a number of different income metrics, but the ones that I really pay attention to are payout ratios on net income, operating cash flow, and free cash flow. So Dividend.com doesn't provide this information for us, so it's something that we're just going to have to calculate on our own. Now, fortunately, just this morning, I wrote a little script here to pull income data, cash flow data, balance sheet data from this website called alphavantage.com. And this is a free website. I can just query their API here and actually get all of that information and calculate those payout ratios myself. Now, this is something I already did. We don't have to run the script again, but here we can see the payout ratios for these three income metrics over the past 5 years. So year end in 2022, we saw a payout ratio in net income of 50.83%. Operating cash flow was 29.09%. And then free cash flow, we see a spike up to 103.88%. Now, cash flow is basically operating cash flow minus capital expenditures. So if Verizon is investing a lot in new infrastructure, new cell towers, I know they're investing heavily in 5G right now and have been over the past several years, then their capital expenditures are going to go way up and their free cash flow is going to go way down. And that's why we see this spike in free cash flow payout ratio here in 2022, and also a negative payout ratio, which means negative free cash flow in 2021. But if we look at the 3 years prior to that, these payout ratios on free cash flow are very sustainable, and the payout ratios on net income and operating cash flow are well below my safety margin, which is about 75%. So I'm not too concerned about the payout ratios. I would say this dividend is very sustainable, and actually I like to see that they're investing in new infrastructure, and we should expect to see cash flow increase, since over the past 2 years they've been investing heavily in capital expenditures. So those payout ratios should go down over the next several years. Now, we've looked at the sustainability of the dividend with the payout ratios. Now let's take a look at the long-term viability of the company through their financial growth. And again, this is something that I've kind of automated a little bit with this Python script here. I created a function called show stock growth, and all I do is type in the ticker, and I can get the trend line growth for net income, free cash flow, operating income, cash flow, and all that. So I already ran this, and what we're looking at right now is, let's see. Sorry about that. What we're looking at right now is net income. We can see our net income growth is about 5.1% per year. Free cash flow has been declining at about 11%, 11.2% per year for the past 10 years. Cash flow has grown at about 2%. Diluted continuous operations, that's a conservative estimate of earnings. That's been growing at about 3.5% per year. Price has been fairly flat over the past 2 years on a trend. We'll take a little bit of a closer look at that later. And their dividend per share has been increasing at about 2.1% over the past 10 years. So this is these are pretty good numbers. Operating income at 1%. It's a little bit conflicting because we're seeing strong growth in net income, but very strong declines in free cash flow, and then fairly mild, steady growth in the rest of the income metrics. So let's take a closer look at the free cash flow numbers just to see exactly why we're getting negative free cash flow trending over the past 10 years. So let's go and take a look at their historical data. This is from stockrover.com. So here we can see actually fairly steady free cash flow. And then back here in 2017 and then in 2021, deeply negative free cash flow numbers. And that's why we're seeing a trending, like a trend line, negative growth rate for free cash flow. It's really because of this number right here, this negative 21,249 And this is in millions of dollars, so that's $21 billion in free cash flow. So if we exclude these negative free cash flow numbers, it's actually fairly steady and maybe even growing a little bit. And we can see that their net income is also trending up, their operating income trending up, and that's consistent with what we were calculating earlier. So long term, I think this company is in good shape. I like actually that we're seeing some lower and even negative free cash flow numbers. That means they're investing a lot in infrastructure, and in the future we should see these free cash flow numbers increase as the life of a lot of those pieces of infrastructure are on the scale of decades, 20, 30, up to 50 years. So overall, I'd say this is a fairly safe, fairly good play for a long-term holder as far as dividends are concerned. So what can we expect in terms of income on this stock? So here we're on MarketBeat, their dividend calculator, marketbeat.com. And we're going to look at a starting principal of $1,000. So if you invest $1,000 in Verizon stock today at their current share price, with their current yield and dividend increase amount, all the things that we looked at earlier in this video, what can you expect to earn after 20 years of being invested? So just to take a little bit of a closer look, here we're looking at the initial annual dividend yield of 7.31%. That's what we got from NASDAQ.com. The expected annual dividend amount increase per year. This is the 10-year dividend growth rate from Dividend.com. And the expected annual share price appreciation of 0% per year. So when we calculated the share price appreciation, it came out to negative 0.5%, somewhere around there. And if we look at NASDAQ again, and just look at what the price action's been doing, so from mid-2013 all the way up until about mid-2018, so a 5-year period, trading more or less sideways. Obviously there are ups and downs, but the total appreciation over that time period, 51.55 to here 51.48, almost exactly 5 years later. So that's basically no increase, right? And now, a quick spike up in 2018 to 59, and then another 3 years or so, and it's trading fairly flat. Obviously, market volatility plays a factor. It's going up and down, but the long-term trend is fairly flat. Once it finds, a happy medium, wherever it's going to average, it stays there for a good 5 years. And so that's what I'm expecting to happen here. Now that we've kind of dropped to a new low, is that we should see this share price swing up and down for the next 4 to 5, maybe even 10 years around this $35 to $40 range. That's my hope. And that's what I'm assuming when we're calculating these income projections. So let's calculate the dividends really quick. And down here we can see a total yield on cost of 53.85%. So that means that you invest $1,000 and after 20 years annually, you're taking in $610.05 in annual income. And you never had to invest additional capital. This is all just drip investing. Over 20 years, the total dividends paid would be $4,372.41, and your average annual return is 8.23%. Now, keep in mind that this is without any share price appreciation at all. 0% share price appreciation. And that just goes to show you how powerful dividends can be when they're actually reinvested and paid out consistently and consistently growing over a long period of time. So that's pretty much it. Just as a disclosure, I do own Verizon stock, and I'm pretty bullish on the stock. I think that the market has kind of overreacted with this Amazon news. Obviously, there's no crystal ball. I don't know what's going to happen, and I'm very interested to see what does happen over the long term and how these Amazon negotiations actually wind up working out. But for the time being, I'm buying more at this lower price, and I can't recommend that you do the same. I'm not a financial advisor. I don't know what your particular financial situation is, but I think that this is a bargain price. So with that being said, that's the end of this one. Thank you so much for watching. If you found this information helpful, make sure you drop us a like, share this video with your friends, subscribe, and please leave a comment to let me know what you think. I think this is a very interesting little topic here, and the price action has been absolutely crazy with these different stocks. And I'd love to know what your opinion is. So please leave a comment, let me know. And until next time, make sure y'all stay safe and take it easy. See you next time.